What if I told you the stock market isn't just for Wall Street pros, but for you? That you could grow your wealth, beat inflation, and maybe even retire early without constantly watching charts or picking the next Tesla? Sounds crazy? Let me show you how smart, simple investing actually works. Investing in stocks means owning a small part of a company. When that company grows, your investment grows. Over time, this is one of the most reliable ways to build wealth. But here's the trick. Most people either avoid it out of fear or jump in without a plan and lose money. Step 1. Define your goal. Retirement? A house? Financial freedom? Your goal sets your timeline. The longer you can leave your money invested, the better. Historically, the stock market averages 7 to 10% annual returns after inflation. That's powerful. Step 2. Know your risk tolerance. Can you stay calm during market drops? If not, go conservative. Maybe a mix of stocks and bonds. If you can handle volatility, you'll likely see higher returns. Step 3. Pick your investments. You can choose individual companies like Apple or Netflix, but that's risky if you don't know what you're doing. A safer, smarter move for most people? Index funds or ETFs. These are bundles of hundreds of companies, so if one fails, your whole investment doesn't tank. For example, the S&P 500 Index Fund gives you a piece of 500 major U.S. companies with just one investment. Then invest consistently. This is called dollar-cost averaging, putting in money every week or month, regardless of whether the market is up or down. It takes emotion out of the process and builds wealth steadily. Watch out for common mistakes. Chasing hype. If a stock doubled last week, it might crash next week. Paying high fees. A 1% fee might not sound like much, but it adds up big over decades. Investing short-term money. If you'll need the cash in a year, keep it somewhere safe. Obsessively checking your portfolio. That leads to emotional decisions. Don't do it. Start by opening a brokerage account, Fidelity, Vanguard, Schwab, or an app like M1 Finance. Begin with whatever amount you can afford, even $50. Set up automatic contributions so you don't have to think about it. And remember, the biggest mistake is not investing at all. Inflation slowly kills your savings. But investing, even imperfectly, gives your money a chance to grow. So if you found this helpful, comment below with your biggest investing question. Share this with a friend who's scared to start. And hit subscribe. We're turning investing from intimidating to empowering, one step at a time. Thanks for watching. See you in the next one.